Welcome to the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. I'm Michael Bull, your host to the world of commercial real estate, where our topic today is retail and retail real estate. We'll get a look at the U.S. investment market. We'll also discuss retail tenant strategies. We'll also share some leasing tips. You know, the retail investment market has been really hot. At Bull Realty, we're based in Atlanta, and we sell shopping centers and single-tenant net lease properties throughout the Southeast, and it's very busy right now. There's a lot of buyer demand. We're also seeing improved property performance in most of the submarkets we work in. Occupancy and rental rates have really been increasing. Well, let's start with a look at the investment market in the U.S. Please welcome my first guest, Dan Fasulo, Managing Director, Real Capital Analytics. Dan, thanks for joining us today.
Thanks for having me, Michael.
Well, Dan, how has retail property sales volume and cap rates started off in 2014, and how does it compare to last year?
We're just about to release our Q1 numbers, and what I'm seeing is a pretty broad recovery in investment activity and pricing. Definitely matching up your anecdotal thoughts there about what's going on in Atlanta. We tracked RCA tracked just under $19 billion worth of retail property sales nationwide in Q1. That's up about 100% versus the Q1 of 2013, and it's the strongest start to a year since 2007, actually. And really diving down to the different subtypes. There's a lot of subtypes in retail. The recovery was broad across different types of properties and even different markets. This recovery and investment activity is not limited to the major markets anymore.
Well, that's interesting. So what do you see for cap rates across some of these property types?
Yeah, well, retail was late to the cap rate compression party, if you will. So it's the higher yields available are really drawing money in from other property sectors that were preferred earlier in the recovery cycle, like multifamily and CBD office. But with yields super low in those segments, the capital's flowing in, and we're starting to see pretty much across the board cap rate compression. Strip centers, obviously urban type retail has been very hot, and even regional malls we're seeing some nice compression lately.
And how much compression are you seeing? I mean, if volume has doubled from Q1 of last year, you must be seeing quite a bit of compression.
Yeah, I mean, it's depending on the segment, it's anywhere from 30 to 90 basis points, and that's in an environment where interest rates kind of creeped up over the past 12 months as well.
And what do you expect for demand moving forward, Dan? Do you expect this retail investment market to continue to heat up? What do you think will happen?
Well, the bulls are saying that look how far we've come back without a significant recovery in economic conditions. We've kind of been trickling along here with the national recovery, and as you said, rents are just perking up now. We have, in most markets, rents are still 15-20% off their highs from the last peak. So I think the sector could certainly still see some momentum in 2014. Eventually, as we approach kind of 2007 levels of activity again, we're going to run into the law of big numbers. But I see a pretty rosy scenario here in 2014.
So, Dan, do your institutional clients around the country and around the world, how do they feel about retail compared to other property types?
It definitely depends which segment of the market you're in. For the larger, more institutional quality assets, there's a broad range of institutional capital interested. Whether it's pension funds, insurance companies, foreign investors, or even the larger public REITs. in the single tenant segment, it's really been the REITs that have been dominating, not just the public REITs, but the non-traded, the private REITs have been gobbling up assets nationwide.
Well, I think it's a good time, with interest rates still as low as they are. And like you said, the fundamentals are improving. And you mentioned foreign investors. How much of your volume is from foreign investors? And what's the trend there? Are we seeing a little more foreign investment than we did last year or not?
Yeah, I mean, the actual dollar amount is way up. But overall, foreign investors never really get higher than about 10% of the overall market. For a variety of reasons, not the least the difficulty is getting money in the country and the additional taxation through FERPTA. And to be honest, also, RCA is undercounting it a little bit because a lot of foreign capital comes in, through investment managers, through dedicated funds, and even through private partnerships, mainly on the coasts. If you're in the right segment of the market, you're definitely feeling the influence of foreigners. And I'm thinking about, kind of high street urban retail is a preferred asset class right now.
Right. We're talking with Dan Fasulo with Real Capital Analytics about the retail investment market. And Dan, what are some of the trends? What's affecting this retail investment market? What are you hearing?
I think everyone's really waiting for the fundamentals to pop. For rents really to take off again, for occupancy levels to increase. I think you've seen steady improvement, little by little, and there's a lot of money trying to get ahead of the improvement in fundamentals right now, and even maybe paying a little too much for some opportunistic opportunities, according to some. So we're waiting for that recovery in fundamentals, and I think that could be the next leap forward, if you will.
And I guess the lack of new construction has been part of that, hasn't it? I guess that's why some of these investors are thinking that they're going to see a big pop in an increase in fundamentals because of the lack of new supply.
That's a great point. And your second and third ring suburbs have been little to no construction over the past 5 years of new retail space.
Yeah. Well, Dan, what's in the numbers that might surprise people?
With prices having surpassed all-time record highs for certain segments of the retail sector, I think that you're going to find a situation where there's some natural pushback from investors. I probably put urban retail in that bucket, even some larger, more long-term let institutional assets. I think with the potential rise in interest rates, I think pricing's gone just about as far as it can go, without another external event really driving even more capital into our space here.
Yeah, that's a good point. I think some of these cap rates for some of these core assets might surprise some of our listeners. What are some sample cap rates that they're so low might surprise some of our listeners in various areas of the country?
In some of the major metros, and I've seen some sub-4 caps for certain assets. I mean, that's usually with an under-rented property in a prime location, and you have to do a leasing strategy. But even for some of the single-tenant retail properties, with that income locked in for a long term, accepting a yield, 5 to 6%, it makes me a little nervous, especially if interest rates go back to historical norms.
Yeah, that's a good point, and but it is a nice hard asset. I think people feel safe with real estate to a certain extent. It's not going to go away. Or short on the break, but where do you see some opportunities, Dan?
I do like opportunistic plays, especially in first-ring suburbs and more urban-type environments. Almost every city has something like that. I think that's where the demographics are. I think that's where the growth is. I think that's where companies want to locate. It's where people want to live. I'm nervous, as I said, about kind of long-term leased core property right now.
Yeah. Well, Dan, thanks for joining us today. We appreciate you being here.
Thank you, Michael.
If you like more from Dan in Real Capital Analytics, visit rcanalytics.com. Well, stay with us. We're going to have more on retail and retail real estate. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, Florida International University, Real Crowd, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.